Hello everybody, my name is Jason Corona with Corona Accounting Solutions. Welcome to our first ever edition of Tax Talk. Today and in subsequent videos we will be talking about taxes, we will be talking about bookkeeping, payroll, we're talking about business entities, various tax and accounting topics of the day. But I was hoping to plan to go on YouTube live today, but unfortunately they're making me wait another 24 hours to verify some stuff. So just another hoop we got to jump through. But I still wanted to make this video. It's very important that we make this video so that we at least get started on it. But we will be having more frequent videos and live chats via YouTube so that you can go online when we're online and chat with the taxman live. My name is again Jason Corona. I am an IRS enrolled agent, which is a federal licensing, and then I am also an Oregon licensed tax consultant, which is at the state level. I am not a CPA, okay? I can do everything legally and with my licensing that a CPA can do with regards to audits and representation. The only thing that I cannot do is issue opinionated financial statements for publicly traded companies. So other than that, if you have any tax questions, I am your guy. I've been doing this for a long time. This is my 16th tax season. I've been in the industry for 25 years, since 2000, but this is my 16th year with a tax license. So I've been around the block a few times, learned quite a bit, and the one thing that I've got, and the one reason why I thought it was really important for us to be able to go live and have that live chat is so that you can have the opportunity to, oh, something came up and I just need to ask really fast. Cool. Send the question in and we'll try to answer them as live as much as possible. We do have our emails so that in case you do have questions and you miss a live channel, a live feed, that you can email to us, and that's info at coronapdx.com. So that's info@coronapdx.com. Give us an email, send us an email. We don't charge for asking questions. It's one thing that we love to do is we want that interaction between you and us so that we can help answer any questions you may have to the best of our ability. So today, let's get to today's topics. The first topic is the BOI filings. What's BOI filings? You've heard it probably in the news. You've probably seen it here and there. It is beneficial ownership information. Okay? And that beneficial ownership information is coming from, let's go back a half a step. Who is requiring this? This is being required by the FinCEN division of the IRS. FinCEN is FINCEN, the Financial Crimes Enforcement Network. That's what FinCEN stands for. For those of you who have had international bank accounts in other countries that you've had to file the FinCEN 114 form in the prior past with your tax returns, this is the same division that requires that form. It basically lets them know if you have financial assets in another country so that you're not sheltering or hiding assets and not paying tax on them. So this same division within the Department of the Treasury is working closely with the IRS, and they're putting out a requirement for filing for corporations and limited liability companies within a specific structure and filing requirement. The filing requirement is basically if you make less than $5 million in gross revenues and you're an LLC or a corporation, you should be filing. The question that a lot of people have asked me already is, does this filing requirement include sole proprietors? Yes and no. Yes, in that if you're a single member LLC taxed as a sole proprietor, you still are required to file. If you are Joe Smith who does some DoorDash or Uber and you get a 1099 with your name and your social but no business name, no EIN, no LLC, then no, you are not required to file this BOI filing. So what is the benefit ownership information reporting? So the FinCEN division of the United States Treasury is working with the IRS to try to make sure that they have a listing of every business owner and how much their percentage is. So they want to know your name, your address, your date of birth, and then your business that you're tied to, even if it's multiple businesses. How much of that business do you actually own? Why is this something they're wanting? Because they don't actually talk directly, they don't have access to your IRS tax returns. They only have access to what they are given. And so, like with the FinCEN 114 for financial reporting for your bank accounts or foreign bank accounts, that's all they get of your tax return. They don't get everything else. They get that one form and that's it. So they don't have access to whether or not you're a part of an S Corp or C Corp or partnership, etc. They don't know. And so there's a lot of things that have been going on in the news lately about this BOI information reporting. It was scaring a lot of people. Okay, number one. Number two, they had it, and the reason why it was scaring people is because they only had a certain amount of time to file this informational filing, the BOI. And they asked, each filing takes only like 15 minutes, 10, 15 minutes, more or less, to put in the information, and then you have to scan a copy of your driver's license to send along with them. So they have a face that goes with the name and the information. Okay? And it's a government issued. So they would take a passport as well, as long as it has a facial picture of you along with your information. Now, the big hoopla in the news is that there are several people that have actually filed lawsuits against the FinCEN division of the Department of the Treasury, saying that this reporting requirement is unconstitutional, saying that they don't need to have all this information. They're trying to find needles in a haystack, basically trying to say, oh, we're going to find all these people that are, basically financial criminals that are hiding money or hiding assets through these different businesses. The problem with that is that they're looking at the individuals and the LLCs and the small businesses under 5 million that don't generally have a whole lot of assets to hide versus the larger company corporations that are over 5 million. They don't even pay, they're not even required to file anything. And so they have had some injunctions. The courts in Texas have made a nationwide injunction saying that these BOI filings, as the FinCEN division has said, that they are required, they were supposed to be filed by January 31st. Or excuse me, December 31st of 2024, right before New Year's. They were supposed to be filed. And what was the filing requirement? You had to have a business that has either an LLC, a corporation, and you had to have owned at least 25% of that company. Okay? And you have control over the business. Now, it's like I said, it doesn't take a whole lot of information on there. Excuse me. But the penalty is what was scaring people. The penalty was showing up to $591 per day. That if you did not file this and you were late, you were going to get penalized $591 per day for failure to file. Now, with the injunction that the Texas Supreme Court has put in, they have no longer, they've removed that December 31st filing deadline, and they have instead said, well, we're going to push it to January 13th. So that's in 10 days from now. With that injunction, there's still, the courts are saying that it's still, you can't put a deadline on it because it's still being discussed of whether or not this is constitutional or not. And so they're saying, okay, we're not going to worry about the deadline for right now. We're going to keep that as a tentative deadline in case this injunction goes away. But as of right now, on January 3rd, 2025, the filings are still 100% voluntary. Okay? A lot of the clients that I've spoken to and I'm going through with my client listing and saying, that this is what they're asking for. Do you want me to do it or not? And a lot of them I've just said, you know what, just get it done, get it over with. So they don't have much of a problem. But there are people that really think that this is an invasion of privacy. So, and you know, I can see it both ways. So I'm willing to help out as much as my clients need me to or want me to. But it's something that it's necessary for you to know, because if the injunction gets overturned, then it's something that if you have a business, if you have a corporation, an LLC, partnership, S corp, single member LLC, tax as a sole prop, you need to get this filed probably sooner than later, just in case. You know, to me, I've always tried to err on the side of caution. So to me, the sooner the better. And you know, it's better to be safe than sorry. Okay. So again, what do you need? What information is reported? Your full legal name, date of birth, current residence and address, and then your identifying number, which is either your passport and your driver's license, or your driver's license number, as well as the business information. So the business name, EIN, address, and then how much percentage do you own. And as long as you're over 25%, then you are required to put yourself on there. If you have businesses that have minority shareholders or small minority partners, so you have a partnership where you have one person who owns 75%, and then like 5 people that only own 5% each. Those 5% shareholders or partners are not required to file, just that one who owns more than 25%. Okay? So the other thing I wanted to do, I just got back not long ago, probably about almost 3 weeks now, from Las Vegas with a tax update. Excuse me, for the upcoming tax year. And one of the things they talked about, and I think it's something to kind of really touch on, is the TCJA sunset. The TCJA, the Tax Cuts and Jobs Act, that was implied in 2017. It first went into place in 2018 for taxes, and it is due to sunset in 2026. Okay, so we have this year for 24, next year for 25 was still the TCJA, and then in 2026 it's going to go away, possibly. We're going to talk about that. What does that mean? Some of the expiring provisions of the Tax Cuts and Jobs Act. The standard deduction. In 2018, the standard deduction more than doubled. It went from $12,000 to $24,000 for a married filing joint individual. And so for the standard deduction, for it can go down to from $30,725 to down to $16,525. So it's going to go down more than $14,000 for the standard deduction. The personal exemptions went away completely. That's part of the Tax Cuts and Jobs Act in 2018. So you had personal exemptions. So an exemption was, I believe, several $1,000s per person who was on your return. Okay. In 2018, those went away completely, so there was no more personal exemptions because the standard deduction was so high. But that's going to go back to $5,275 in 2026 if it continues the way it goes right now. The tax rates, the top tax rate for 2024. Excuse me. The 2024 top tax rate for individuals is 37%. And that's for actually all filing statuses. Single, married filing joint, married filing separate, and head of household. Okay? Qualifying widower as well. So that's up to 37% is the top tax rate, 37. In the expiration of the Tax Cuts and Jobs Act, the top tax rate is going to go up to 39.6. So it's an extra 2.6%. The SALT cap is going to be removed. Now the SALT cap is the state and local tax deduction that's on your itemized deduction schedule A. SALT, S-A-L-T, state and local taxes. Okay. Right now, with the Tax Cuts and Jobs Act, that is capped out at $10,000. So what is involved with that? So if you have certain states like state of Washington, state of Florida, state of Texas, state of Nevada that have sales tax, you can use that as part of your itemized deductions, the sales tax. Okay. The other option is using the taxes that are paid on your W-2. So state taxes that are paid on your W-2. Including with the SALT is real estate taxes, personal property taxes. Okay. So let's say you own a home and you pay $4,000 in real estate taxes. Okay. And then you look at your W-2 and you are paying, let's say you have a high W-2 and you pay $7,000 in W-2 taxes to the state. Okay, so that's $11,000. Okay, the cap's at 10. The cap is at 10. So with just those two things, you're losing $1,000 in deduction because you've already capped out your SALT. Okay, state and local tax deduction. The P's limitation. P's limitation is another portion of the Schedule A that was removed with the Tax Cuts and Jobs Act. It was basically a limit on how much your Schedule A deductions were depending on what your adjusted gross income was. So that could actually come back. That was taken off completely, which a lot of people were very happy for, but they may actually get that coming back in 2026 if things are going to go the same way. There's also a 2% itemized deduction, which will bring back what's known as the 2106 form, the unreimbursed employee expenses form. Now, a lot of people with the Tax Cuts and Jobs Act were very unhappy because you have, like, for example, teachers that have W-2s. They normally would only get a $250 adjustment for educator expenses, right? But teachers come out of pocket so much throughout the year for supplies, for trips, for whatever that they do for their kids. And so they would use the 2106 form for unreimbursed employee expenses that have to do with your W-2. You have admin assistants that come out of pocket, and sometimes they get reimbursed, sometimes they don't. Real estate brokers that have a W-2 with a builder, and sometimes they come out of pocket, and a lot of times they don't get reimbursed for that. So they would normally use a 2106 unreimbursed employee business expenses and get a deduction for that on their Schedule A. However, with the Tax Cuts and Jobs Act, that went away completely. So if the Tax Cuts and Jobs Act sunsets and expires, that 2% employee deduction, the unreimbursed employee business expenses, the 2106 form, could come back, and a lot of people would be happy that. The child tax credit goes back to $1,000 per child that's under the age of 17. And there's a limit that if you have a certain amount of income, that the child tax credit actually gets limited on how much you're not going to get just automatic $1,000 because you have a child on there. If you have over $110,000 on there in your adjusted gross income, then your limit on the child tax credit could be brought down. The QBI, qualified business income deduction, is set to expire, and that's a 20% deduction of what your net profit is. So that could go away completely, and that has helped a lot of small businesses in our COVID time, have helped them kind of lower their tax liability. So that's a big deal. Estate taxes, if you're married, it goes down from 28.6 million to 14.3. So if you have some estate tax returns, then there's minimums that you have to file. What has Trump ran on when he was voting for running for president? These are some of the things that he's wanting, or what he has promised that he's going to do with regards to the Tax Cuts and Jobs Act. He wants to lower the tax rate to 20% or 15% more for U.S. companies and corporations. He wants to increase the child tax credit from $2,000 a child to $5,000 per child. He wants to remove the SALT cap, the state and local tax cap of $10,000. He wants to get rid of that completely. He wants to make a lot of the provisions that we've talked about with the Tax Cuts and Jobs Act permanent. He wants to exempt, and this is a big one, Social Security benefits. Tips that are made like by baristas and waitresses and waiters, tips, and then also overtime pay. He's trying to make Social Security benefits, tips received, and overtime pay completely exempt from taxation. That is huge when it comes to W-2s, because of the fact that with W-2s, part of your box 1 of gross wages includes overtime pay. So what are they going to have to do? They're going to have to add another box to your W-2 and split out even more. How much of it is regular pay? How much is it overtime pay? If this actually goes through. And what does that mean? That means people in the construction industry, that's a big one. Restaurants, another big one. Baristas, coffee shops, those who put in a lot of overtime, those who get tips, they are no longer going to be taxable to you if this goes through. Will it go through? I don't know. The other exemption he's trying to do is auto interest. Now, auto interest could be a good thing, could be a bad thing. The normal business that has a financial liability in buying a vehicle for their business generally likes having that auto interest there, because it's an additional deduction that they get to take. They don't get to take the full amount of the payments for any kind of auto payments that they make, but they do get to take the interest from those payments. So if he's making that exempt, it's kind of, the one thing that I've seen so far that is going to is going to kind of hinder small business owners a little bit. It's not going to be a huge, most small businesses don't have a whole lot of debt specifically because they're small business. They don't have the assets to acquire such large debts. But larger construction builders, commercial construction builders, that's going to be a bigger deal. So if you pay a lot. Okay. Another thing I wanted to talk about real quick is just basically the IRS service. Okay, it's not one of the topics here, but it's something I just wanted to briefly touch on. Whether it be myself or another tax person that you have that you've been dealing with for a lot of years, remember that we are individuals, and we are all, including us, are at the mercy of the IRS. Okay, why is this important right now? With this tax update that I just went through, I got some statistics that were actually pretty shocking, and it made a lot of sense why, as a tax professional, I get frustrated with the IRS. And I understand completely with my clients when they get frustrated with the IRS as well. So they have two different sets of lines, phone lines with the IRS. Okay, they have the regular tax hotline that you guys as taxpayers call. Okay, when you call them, you can sit there on the phone for 2 or 3 hours and just on hold. Okay, or they give you the option for we'll call you back. And it could be hours and hours later. It could be the next day. We don't know. Then there's the tax practitioner line. That means that tax professionals like myself have a special line just for us to call in and handle items for our clients that they give us power of attorney and we go in and say, okay, here's the situation, here's the problem, this is what we'd like to do, and we work as professionals with the IRS to actually get the situation rectified for our clients. Okay, here's the scary part. For 2023, so this was a little over a year ago, for the regular taxpayer line, so clients, regular public calling it, they received 92.9 million phone calls in 2023. Okay, the percentage, the number of actual calls that were answered by an IRS employee was 27.3 million. So the percentage on that, 29%. So that means 71% of the people who called did not get a hold of anybody. Either got kicked off the phones or asked to be called later and never got called. Okay? Now, as tax practitioners, as a tax professional, we have our own separate line. Okay? So for 2023, the statistic, 6.7 million phone calls were made through the practitioner line. So tax professionals like myself calling the IRS trying to get some assistance for our clients. Of that 6.7 million phone calls, only 1.9 million got answered. So again, 29%. So us as tax professionals, we're supposed to have a separate line so that we have more access to the IRS in order to get our clients' situations rectified. However, we're getting just as little assistance as anybody else who calls in. Now, I've actually talked to clients and they've said, oh, every single time I call, I get somebody right away. Wonderful. You are like the holy grail of telephone calls. I need to go to your house and make phone calls, because that's, if you're getting through every time, I don't know what the deal is, but a lot of times I call and 29%. That means 7 times out of 10, I call, I don't get anybody. I get kicked off, or I get told the phone queue is too busy, please call back another time, and they hang up. Or there have been times where I actually go through and I get pulled on a hold, and then I'm on hold for 45 minutes to an hour, and then I get hung up on as well. So it's really frustrating. So I totally get where you guys are frustrated, but for us, we're frustrated too. The scary part about those percentages, that was with the federal government funding. Okay? There was something in the news about 2 or 3 weeks ago that the IRS's funding got cut by like $20 billion. That means there's going to be less people on the phones handling situations. So that percentage of people that are actually getting through and talking to an agent is going to go down. So there's going to be even less people getting through to talk to the IRS, and even more frustration ahead. So just be aware of it, okay? We're going to do everything that we can from us as a professional institution to help you to get your situations rectified, whatever the situation may be, okay? Whether it be an address change or a letter that needs to be addressed and discussed with the IRS, and just sent in saying that there's a different EIN or a different payrolls that needs to be submitted, whatever. There is going to be some more frustration ahead, so be aware of it. Please be patient, whether it be the people at the IRS or with your tax professional, because whether your tax professional is calling into the IRS or you call into the IRS, remember, the IRS, they're individuals too. They're just doing what they can. There's only so much funding, so they cut down their staff. When COVID hit, their staff got cut from 100% in many different call centers down to like 15 to 20% in half of the call centers. So there was so much of a backlog. And even today, with like ERC, the Employee Retention Credit, they have like a 5 million tax return backlog for the ERC. So that's another thing. We'll discuss that on another tax talk. But I just wanted to come on today and post this video. I hope that everyone's having a great new year. This is a new year. It's going to be some new things going on. We're going to have everybody, as much as we can, up to date as far as tax updates. As we get them, I will go live and try to get. I've got a list, and it was really funny that I was trying to decide what topics to discuss here with live YouTube channels and with our tax talk segments. And within like 15-20 minutes, I had almost 100 different topics. So we have a lot to discuss, and there's a lot of things that I want to bring up. And part of it is just things that you may already know, and it could be things that you didn't know and things that may help you in the future. And, you know, if you want to sit down and schedule an appointment with us, by all means, or take the information that we give you and talk with your tax professional. You know, our whole goal here is to get you in the know. Okay? Is to get you thinking and saying, oh, that's something I didn't know before. I need to talk some more, and maybe let's ask some more questions. Because our bread and butter is the individual people that we come across every day, and the small businesses that are just starting out, or the small businesses that are struggling, that we're trying to help them achieve their goals. Okay? Every single client that I talk to when they're a new client, that's my first question. What is your goal? What are you trying to achieve? Do you want to buy a new house? Do you want to get yourself financially stable? What is your goal? Okay? Corona Accounting Solutions, we are here to answer questions. We're here to provide solutions, and we are here to take the fear out of finances. So, again, my name is Jason Corona. If you want to get a hold of me, info@coronapdx.com, or you can text me at my cell phone, 503-997-6672. Text me and ask me questions. I'd love to talk to you. Let's set up a Zoom meeting. Let's set up some kind of face-to-face. Let's go have coffee, you know. This is Miss Georgie the dog. You'll probably see a lot of him throughout the different videos that we post here. So please have a wonderful day. Stay safe out there. If you are experiencing the flu, I know myself and my family, we caught the flu, and we were sick for like 3 weeks. So we're back in the office and back ready to go again and getting ready for the tax season. So we want to thank you for joining us today. BOI filings, keep that in mind. Tax Cuts and Jobs Act. Let's talk some more about it. Give me a call or send me a text message or an email, and let's set something up. Have a great day, and we'll see you next time.